What's going on, everyone? Welcome to another edition of Insightful Principles. Can't believe that we're at 49 episodes. The journey has been amazing, and I'm grateful that you all are watching at this very moment. And if you can do me a huge favor, if you can take some time to like, subscribe, and share this video, that would be greatly appreciated. Now, within this video, I do want to talk about Biden's proposed plan of increasing capital gains tax on the wealthy. And I'm going to go into details of how this could possibly affect a lot of investors out there, and also what are some of the drawbacks and what are the purposes of Biden wanting to increase taxes, and just want to be able to provide you all with some insight on how cryptocurrencies are taxed to be able to make sure that you can thoroughly prepare for the future. Now, this will affect some investors if it does get passed, and I definitely wanted to mention that Biden has stated that anyone making more than $1 million per year will be affected by this policy. And I know when I reviewed and did research online, they said that this proposed plan can only affect 25% of investors. At least 75% of investors won't be affected by this because they're not in the $1 million annual income category. Now, I also read that a lot of people that have their account structured in like 401ks, IRAs, will not be affected by this proposed plan, but definitely wanted to make sure that you can stay up to date and understand how capital gains are taxed currently now when it comes to stocks and cryptocurrencies. Now, what he is trying to do is he's trying to raise the capital gains tax to 39.6% on the individuals making $1 million per year. And that is going to be almost double the increase of what it currently is at now, which is 20%. And to put this in perspective of how substantial this change will be for high earners, currently the gains from the sale of stocks, mutual funds, cryptocurrencies held for at least a year are taxed at either 0%, 15%, or at the highest of 20%. Now, the highest tax rate of 20% is for a single filer that has a taxable income of over $445,850. Head of household filers with taxable income over $473,750. And lastly, married couples filing with a joint return with a taxable income over $501,600. So this would be a major change that would affect long-term capital gains tax rates if it is approved for those individuals that are in the $1 million annual income category. Now, this plan is used with the tax increases. The purpose of it is it's going to be able to help fund the Americans Families Pact plan that Biden has been talking a lot about. Now, Biden is proposing that he's going to use these funds to help fund education, with helping employees also to learn adaptive skills, to develop subsidies for childcare, and also he's trying to make community college free for everyone. So I definitely think that is going to be a positive out of it, but I definitely know that there have been some drawbacks and a lot of feedback on how that can exactly affect the economy. Now, others have described that the idea of the tax increase is because he's want to make sure that millionaires pay the same tax on long-term capital gains that they would pay with their ordinary income, such as wages. Now, as of now, the highest ordinary income tax rate is 37%. Now, Biden has also came out and said that he may even increase the tax rate to 39.6%, as I mentioned. Now, we haven't seen these numbers since Obama was in office. I know that during that time, incomes that were at or above $400,000 for individuals and $450,000 for married couples were taxed at 39.6%. And Biden did put this in place during 2013. And the government is also looking at adding a surtax on net investment income, which would be 3.8%. Now, the net investment income will be examples such as taxable interest, dividends, gains, annuities, and even royalties. This extra tax will be applied to single taxpayers with a modified adjusted gross income over $200,000 and joint households that have an adjusted gross income of $250,000. So with this surtax, millionaires, they could potentially be looking at a tax bill as high as 43.4%. So that really is staggering to think how high he's wanting to increase this. And I definitely think that it's going to be very hard to get past. Right now, it's a lot of talks about it. Biden is also going to come out this week to he's going to have a conversation with the public, just stating what is going to happen and how they're trying to get it approved. But I know that it's going to be very hard for it to get passed. Now, it's also important to understand how cryptocurrencies are taxed. I feel like right now, with a lot of the investing mania, it's great to see that everyone has been investing and putting their money in the stock market, putting their money in the crypto market, including myself as well. I think that you have to understand the implications when it comes to short-term and long-term capital gains tax. Now, with crypto, it's treated as property, which means it's looked at as a capital asset such as a stock or a bond. And also, if you were to purchase goods or services using any type of cryptocurrency, let's say Bitcoin, a capital gains tax is incurred based on the gain you made from Bitcoin over the price that you paid for it. So let me give you a great example. Let's say you bought $100 worth of Bitcoin and then the value of it increased by $250. Let's say you took that same $250 and you went out and bought yourself a new pair of shoes. The capital gains tax that you would incur is $150 of the realized profit because it increased by $150. Now, even though you are spending the Bitcoin in comparison to selling it, the IRS still looks at it the same way, and there would be a taxable implication in regards to that. And depending on how long you have held that asset, it either could be a short-term capital gains tax at your ordinary income tax rate or a long-term capital gains tax of at either 0, 15, or 20%, depending on the tax bracket that you're in. Now, if you were to sell or spend your cryptocurrency, and let's say you had a capital gains loss, you wouldn't have any capital gains tax with that transaction. So let's say, for example, you bought Bitcoin at $50,000 and it goes down to $47,000. You wouldn't owe any taxes on that transaction, and you also can offset a capital gains loss of $3,000. That can be, you can tax deduct a $3,000 capital gains loss annually every year. And let's say that your loss is more than $3,000, you can roll that over into the next year, and then you can use any capital gains that you make in the following year to offset the capital gains loss. So that's definitely one thing that you have to be aware of. And for those out there that actually mine crypto or actually receive it as a payment for goods and services, it counts towards your taxable income. Now, taxes are owed on the entire value of that cryptocurrency when you receive it at your ordinary income tax rate. So for those of you that may not know, mining cryptocurrency is simply the process of using computers to solve complicated equations to be able to record data on a distributed ledger within the blockchain network. Now, if you decide to hold the cryptocurrency and either spend or sell them at a later time at a higher value, when you do receive it, you simply will have either the long-term or the short-term capital gains tax that will be applied. Now, keep in mind, if you convert or exchange crypto, that also is a taxable event. And this was one thing that I found out for the first time. I thought that, you can exchange and convert different cryptocurrencies, but the way that the structure is now, since we do a lot of trading like myself, I do it on Coinbase, and then I have my own private key such as a ledger, and other platforms such as Binance. When you are exchanging and you're converting it to buy another cryptocurrency, that also is a taxable event. So for example, let's say that you converted a Bitcoin gain for Ethereum. So let's say you bought $600 worth of Bitcoin and then you purchased $800 worth of Ethereum. The $200 difference, that is the realized profit, and will be a capital gains tax on that total. Now, with Biden's proposed plan, it possibly could bring some changes to the crypto market, especially if it's passed. And it's vital to understand where you stand now so you can be able to properly prepare for the future. Now, on your tax return, I know there is a section on it that clearly states that anytime during the year have you sold, received, exchanged, converted, or otherwise developed interest in any virtual currency, you have to answer yes or no to this question, and failure to answer the question can lead to a felony. So it definitely shows you how serious the IRS is paying attention about filing your taxes around your crypto assets. Now, some of the feedback that I have seen with Biden's proposed plan is that it can lead to a decrease in investment to improve worker productivity and the investment gains over time. Now, the main incentive of why capital gains tax is ideal to have at a low rate is because that it encourages saving, it encourages investing for the long term in capital assets such as stocks, bonds, even commodities, cryptocurrencies. With this change, it's going to be very difficult as well to obtain capital for new ventures, and therefore it can affect the strength and the potential of growth within the economy. So the tax on capital gains, if it is approved, it definitely can affect your investment decisions and your financial planning strategy. But one thing that I would recommend here is that as an investor, you always want to hold your assets long term. So even if this were to get approved, if you're holding your assets 20 years, 30 years, you don't really have to worry about this affecting you. And I mentioned at the beginning of this episode is that this change is only going to really affect people that are in the wealthy income category where they're making at least $1 million a year. So, definitely understand that, you want to be able to just properly prepare and be able to make sure that you're adjusting your investments accordingly. So the bill is yet to be finalized, but it has brought many conversations around how this will impact investors. And I definitely feel it's going to be tough, like I mentioned, for it to get passed because millionaires are not going to be happy being taxed at a higher rate. And also it can lead to a decrease in worker productivity because, they're not really able to invest at the level that they would like because there's a higher capital gains tax. So I definitely think that could also play a role as well. And you also have to consider inflation as well. I definitely think that if it is approved, it's definitely going to lead to higher inflation in my eyes because, the price of things in the economy are going to go up. I'm already noticing now, gas has been going up where I live. Also with groceries, that price of that is going up as well, and other goods and services. And then, when you look at the purchasing value of the dollar decreasing as well, it definitely can have a domino effect. So I definitely think that pay attention this week. Biden will be addressing this plan that he has with the capital gains tax, and it's definitely going to be vital for you to stay informed so you can be able to properly prepare with managing your investments more effectively. As always, if you all can continue to like, subscribe, and share this video, I would greatly appreciate it. If you can also subscribe and support my Patreon page where I create exclusive content in the areas of finance, investing, and business, I'll put that information in the show notes. And with my Patreon page, I do have different tiers where I do my investment Discord chat. It's a private chat where I give investment gems to people that are in that chat as well. And then also I have my monthly Zoom video calls where I'm able to sit down with individuals or families when it comes to retirement planning, financial planning, insurance planning, cash flow planning. So definitely reach out if you have any questions when it comes to that. And I did want to tell you all, thank you so much for tuning in to another episode of Insightful Principles, and take care.